From losing millions to building cash flow for life. Today in the studio, we have Miss Marta Piechnik, and she's going to relate how she did it. Today, we have an amazing guest, Miss Marta Piechnik. So, Miss Marta, welcome to the studio.
Thank you, Andrew.
So, Miss Marta, you came to us about 5.5 years ago.
Yes.
Okay. What prompted that?
I was looking for something to do passive income and something that I could build wealth.
Okay. So take me back, right? Where did you start? Because you were involved in real estate, just not on the investing side.
Yes. So I was involved.
So typically women are not in the trades. You kind of came from that background. Explain how that happened.
So I came from a construction background. We did masonry work. It was a family-owned business. I ran it with my father. And even though it was a very successful business, we had a really big company, but I realized that I really wasn't building wealth. It was very job dependent. If I didn't have a job, our next project, people didn't have a job, and then we couldn't obviously make ends meet. So I wanted to do something that created more of a passive income.
Okay. So explain the trades. What exact trade was your father in, and how do you happen to join him in the trades?
He did masonry work and predominantly focused on like smaller jobs. I came in straight out of college and thought that, hey, I want to build the world. I want to build the skyscrapers. And I remember I went to DePaul University, like going downtown, walking on Jackson, getting off the metro and being like, I'm going to build these skyscrapers one day. And I did. And, you know, not that my dad couldn't do it. It was just the whole mentality of, you know, being an immigrant. I'm an immigrant myself. I came here at age 12, but I don't have as heavy of an accent. I went to school here. I grew up here. I was comfortable talking to people. So really the whole story started when it was like a sexy thing to do. Like during my 20s, everybody was getting engineering degrees, and there was a lot of young people in the field, a lot of people that were my age, like 21, 22. And I'm like, hey, let me see how it is to get jobs, to talk to clients. And that's what I did. And I mean, that first year of me doing sales for the company and going to all these events, and we did over 20 million in sales.
Wow. So you guys are doing, well, I mean, you guys are bidding on some big projects, right?
Yes.
I always like to tease you. I'm like, you guys were building a lot of jails.
Yes.
Right? But you guys built schools. You guys were bidding on projects like the masonry work for like the Trump Tower, those kind of projects
Yes.
you're bidding on. So things are going well, right? What happened?
2008.
2008. But you were not investing, or you were not buying property. So what happened in the trades for you guys?
So in 2008, we were mainly building a lot of those mixed-use condominium buildings where you have the condos on top and then retail on the bottom. And what is that? That's bank money, private money usually. A lot of bigger companies invest in that. And what is the first thing that fell, right? Everybody was able to get a mortgage. I mean, even dogs, I think.
Sure.
All jokes aside, but that was the market that went first. And that was very scary because literally overnight, we had over $1 million of invoices that were out to be paid, and we didn't get them paid. So banks stopped all the money.
Just to give people a perspective, you had a union shop
Yes.
of masons. How many people did you guys have at that time when everything is going gangbusters?
Around 250.
250 people for the audience that is listening. So by any means, I mean, you guys were, you have a big shop, you're successful.
Yeah, equipment, $1 million worth of equipment. And it was a scary moment because when, being a subcontractor, let's take it back. As a subcontractor in the trades, you're not really controlling the money. The general contractor is the general contractor is not really controlling the money either. It's the owner that pays the GC, and then the general contractor pays you, correct, as a sub. So I was just at the wrong spectrum of them.
I mean, at the end of the day, the whole thing blows up.
Yes.
Right? The owner obviously does not make the payments because the bank stopped lending, right?
Yes.
The GC is stuck with a bunch of subs like you guys, and when you're doing that big a project, it looks glamorous, but when it goes south,
It
it
goes
goes south in
south.
a big way.
Yeah, and
Because
it's
you
like
have
millions of dollars.
millions of dollars outlaid expecting to get on a 30-day, 60, 45-day reimbursement cycle,
Yes.
which things are great, everything is happening, and suddenly you get basically left holding the bag.
And it's just not fair because at the end of the day, you do the work, you pay the people, you pay the material, and then you're stuck. Try not paying a weekly payroll on a union employee.
Right.
The union's knocking at your door.
Right.
So there's a lot of pressure.
So clearly it created a whole heck of a lot of mess.
Yes.
So now you came to us about 5-6 years ago, right? At that time, what did you guys end up doing to pick up the pieces?
So this was back in 2008, 2009. And the way we repositioned is we weren't about to give up, right?
Sure.
Like that's never in my dictionary. Like,
Right.
well, let's how do we pivot from this? And that's always, as an entrepreneur, you have to figure out, okay, if something goes wrong, what can you do now to make it better? So that's when we mainly went after the public sector, which is a completely different game plan. You got to be bonded. You got to bid on jobs differently because you're going in front of a board where, you got 10 bids and they choose the lowest bid. It's a little bit of a different. So we strategize that. And that's where we build all the schools and the jails, your
Right.
favorite part.
Right.
And a lot of municipal buildings,
Sure.
more like governmental
Government
work.
work.
You
Okay.
know what I mean? And that was our pivot point. Like that's what we mainly focused on in order to continue to feed all the people that we had hired.
How did you end up? Because as everybody knows, like I believe in small, simple projects,
Yes.
right? I don't want to do anything complicated. You'd been around a lot of complicated stuff, a lot of wealthy people that own, hundreds of millions of dollars of real estate, right? Big condo buildings, big multi-units. Why did you decide, okay, I'm going to start small? Because if anything, right now looking back, people will laugh if they realize the first property you bought. Why did you kind of grab this concept of small, simple, and why did you take that and just run with it?
Mainly risk. I wanted to figure out like where I land. Like my goal was to build wealth, right? And not wealth that I had to work for all the time. Not like real estate, you're not working in it.
Sure.
It's just a little bit of a different generational wealth
Sure.
building. And I wanted to see if really what I'm getting into is going to work.
Got it. So, I still remember, right? You showed up at one of the RIA meetings,
Yes.
right? And at that time, and I'm talking about small, simple, basic things, but just doing it at scale.
Yes.
Right? That you can do simple things, and boring, simple things are the most lucrative. To you and your husband, did that make sense the first time, or did it take a little bit of time?
No, you know what? When I met you, you were obviously already very successful
Sure.
in what you were doing, and I'm a huge believer is be extra careful who you listen to, especially people you take advice from when it comes to money, investing, or anything along those lines. And I saw your success. I trusted the process, and I feel like I was teachable, right? I wasn't like really, oh no, Andrew, you got to come and do it this way. I really took what you gave and ran with it. And I really never looked back. I followed the blueprint that you laid out, and really, I just never looked back and look at what it
So
has.
let's talk about your first property, right? Your first property you bought south suburbs of Chicago,
Yes.
right? And the reason I'm bringing that up is because of two things. Number one, it's a small property,
Yeah.
which a lot of times, but it's a nice, good B minus to see it's a good, solid suburb, right? It's not a crazy area, meaning you don't have to go to crazy areas to go invest.
Yeah.
Very bread and butter workforce type of housing. And number two, it was almost an hour, if not an hour and a half
Yeah,
in traffic
over an hour away
from
from me.
your house.
Yeah.
You live in north part of the suburbs.
Correct.
Right? A lot of times people will be like, oh, Andrew, you expect me to go 45 minutes. Oh, Andrew, you expect me to go hour and a half. And my belief is, listen, what options do you have? right? What is, so how
Remember
did
when
you
I
look at it?
Googled it? No, I Googled it and it came out of Michigan. You were like, no, it's not in Michigan. I'm like, okay, good. I thought you were sending me to Michigan. But for me, I didn't care. Like I was really willing, and I've always had that type of a personality. If something works, you do it until it doesn't work again. And I'm not.
And what was funny was Miss Martha and her husband, you guys are driving around,
Yeah.
right? Looking at, we call it area selection. You guys are looking at areas, and I send you 3-4 listings,
Yeah.
right? I'm like, go look at these. She's like, all of them? I'm like, all of them, right?
And you checked on me if I was
Oh, yeah,
looking. You
absolutely.
checked,
No,
yes.
because my point was that, listen, if you're serious, you do what it takes to succeed. I mean, it's that simple. And that property you ended up buying for how much?
47.
47, right? And at the time, you thought it was a joke.
Yeah.
Why?
I just, I mean, you know how I felt. It took you, 2 weeks to convince me to buy it. And then I just didn't think anybody was going to want to live there.
It's actually a solid brick house,
It is. It's
right?
a cute
It's a
house.
nice brick house. It's a great part of town.
But, I wasn't used to seeing. Now I see houses. For me, it's like second nature now. Perfect. Yeah, write up the contract. But, you got to learn. I came from doing big things, building high-rise buildings, big schools. And it was this little house
right.
for $47,000 that looked like crap, that had two kitchen cabinets. So, it was definitely a learning curve. But that house really put a lot into perspective for me. Like I remember during the rehab walking it, I'm like, wow, this is like for me, I'm not gonna have to get rid of it. I am not doing it for a client. And that really like resonated with me, and I wanted to do more of that.
So you put how much into it?
Around 30.
Around 30. What was at that time, right? What was the appraised value?
155.
155. Today it's 220, 230.
Something
right?
like that, yes.
But here's the beauty that the audience has to understand. She buys it for 47, 30,000 rehab. On top of that, you got some extra money refied out.
Yes,
right?
over 30,000.
Over 30,000. So now, and this is where you truly find people like the Miss Martha's, where she takes an extra money out, doesn't start jumping up and down, oh my God, I got 30,000 cash out, right? She takes it, puts it aside. What did you do with that money?
I reinvested into the business. I ended up doing the same thing with my second property. And then those two properties were the reason why I ended up buying the 10 unit. It was my down payment.
So basically what she does is takes 30 out, right? She buys it, rehabs it, upgrades the value, which is value add, and then obviously refinances extra money out on the first one. Same exact process the second one. Both of them are rented. They cash flow how much today?
Oh, Arcadia is around like 800, 900.
800 bucks.
Same with the other one.
Same with the other one. So you have two small little properties are obviously worth a ton more today.
Yes.
But then she takes that and goes buys 10 townhouses
Yes.
right next to each other. Now this is way up north,
Yes.
right? One of the northern suburbs. Again, workforce housing type of area. And that particular property, first, when you brought me the numbers, I'm like, Miss Martha, what are you showing me? This is nonsense. I don't even want to see this. And you're like, well, what do you mean?
You're like, don't buy it.
Don't even buy it, because I thought that the numbers were so good that I thought she was showing me a pro forma.
Yeah.
Right? A broker just wrote up a pro forma, and I'm like, this is nonsense. I don't even want to see it. And it's funny because I didn't even believe it because the numbers were so damn good.
Yeah.
I thought somebody just made up the numbers.
Yes.
But in that particular 10 unit, right, you needed $120,000 down payment, correct?
Correct. No, it wasn't like 120. It was less, like
A little bit less?
like 80 something.
80
Yeah.
something. But 60, 70 of it came from the
Yes.
refis.
And then the rest from all the
that
credits.
you had already
Yes.
done. And then the rest of it were the rent credits, deposits, all of that kind of stuff she got. So virtually out of pocket, what did you have when you bought the property?
Like 53,000.
Out of pocket.
Yeah.
Right? That's all she had out of pocket to buy 10 townhouses. Now, and this is where that growth thing comes in. A lot of times people are like, oh my God, I want to go do what Martha did. But they don't look at, you did a small property, then you scaled up, then you did a bunch of small projects.
Then everything else after that, like I haven't bought anything bigger than a single family house.
So on single family properties, right? A lot of times people think, oh my God, it's so small. But
I think
today,
like that.
you think like that,
I
right?
think like that sometimes. Like I always come to you, I'm like, I'm ready to do something bigger, but it's just when I run the numbers for something bigger, and we've had that conversation many times, it just does not work. I'm like, how are they underwriting these deals? Like, I want to figure out the magic sauce. I really do.
Right.
And it doesn't work, maybe, but I mean, stacking those little houses,
So
game
how many
changer.
little houses between the single family, little houses for Airbnbs? How many do you have today?
For Airbnb, 6.
6 Airbnbs, and how many others?
So 34 minus 6, 28.
28 other properties. So between Airbnbs and between the other properties, net cash flow, what does that look like a month?
So
Ballpark?
depending on obviously the Airbnb,
Sure.
Around over 45.
45 net a month.
Yeah.
Right? And for a lot of people listening, right, try doing that with a 30-unit building. Try doing that with a 40, 50. I challenge you, try doing that with a 200-unit building or a 500-unit building.
The numbers are just not there.
It's just not there, right? And it's not sexy, but guess what? It's very, very, very profitable.
Yes.
Right? Because this is the most ignored segment of the marketplace. And simple houses in B and C suburbs, now
Yes.
you're moving some of it to A's,
Yes.
right? So now I want to move the discussion to the next part of it, right? Which is to flips. A lot of people want to do a lot of flipping. That is something that is, you're Polish by heritage.
Yes.
Right? A lot of Polish people are in the trades and they're like, oh my God, that's where the money is. You've done a bunch of flips. But why is that not your mainstay? And that is something you do when the right time comes.
Yeah, I look at flips not really as the amount of money it produces, but as far as time goes and what kind of a rehab it requires. So, for example, if I'm doing a house that I need to put $100K into it, I want to take at least $100K out of it. I'm not going to do it for $30,000 after I put $100K of work into it.
So let me put this in perspective what the rules that we use is that ARV after repair value.
Correct.
So let's say you're selling a property for $500,000,
Okay.
right? Then in 6 months, the good deal that we would call a home run deal would be $500,000 sale price. In 6 months, you make 20%, which is $100,000 minimum, or the rehab amount, whichever one is higher.
Yeah.
So, like Ms. Marta said, if she does 60,000 rehab, boom, sells it in 6 months, make $100,000 on a $500,000 sale. Great, that's good.
Yeah.
But if she's putting 150 in, and now she's only making $100,000, no.
Yeah, and it's just, you got to look at timing too. If you're doing a 100K rehab, it's usually
8
a
months.
big rehab,
Yeah,
right?
it's minimum 8 months.
And, you got inspections, you got people, you got contractors, you got to hire, you're gutting everything out. God knows what you're going to find in the walls. And then what happens is that if that project takes me a year to do, really, if you divide that number, it's not that great of a return. I would rather do a rental.
Right. And that's the part of it a lot of times people don't understand. People will often say, oh, I just flipped this house, made $70,000. Okay.
I'm like, how long did it take you?
How
And
long
they're
did it
like,
take you? Right? Because, it took me 16 months. What did you make? I mean, you'd be better off working at McDonald's. I mean, literally. We're not in the rehabbing business. We are in the investment business, meaning
Exactly.
how little do I do and how much money do I make?
Correct.
Why is it especially a lot of immigrants, right? We laugh about it about Polish people or Hispanic people, right? Because why do you think they always are, I got to work hard. Do they not have any other magic formula besides just working hard?
You know what? I feel like it's our culture.
Okay.
I feel like I had to unlearn to work too. Like there were times where I'd be like, okay, well, you're not doing anything productive. Get to work. And
Right.
and I kind of do that with my kids too. I sometimes catch myself. And I realize that it's not that we don't know any better. It's just what we're used to. Because it's that hard work mentality. You work hard, you put your money away, and then that's what you live off. Like for a lot of European people, like old school European people, it's very hard to understand.
Right.
They want to have that money in that account. And for them, that paycheck that they get after they sell the house,
It's very attractive.
You
It's
know what
very-
I mean?
No,
And-
and I think a lot of times, even Indian culture, whatever, a lot of these cultures where people didn't come from a lot.
Right.
All they had was work ethic,
Right.
And all they had was good, honest way of earning a day's living,
Correct.
right? And as much as we laugh about it, especially for our parents, they didn't have a lot of opportunity.
Mm-hmm.
Financing was different. You didn't have the level of sophistication. Information wasn't there.
Yes.
Right. And so they would literally take easy things and make it difficult because they're somehow justifying,
Yeah.
their existence.
But having money in the account made them feel secure.
yeah.
Right? Like right now, okay, maybe a house is not very liquid, but if you look at all the equity, millions of dollars in equity, if you were to sell it right now, but it takes a mindset shift
it's a
to
different-
look at it like that.
And the other part of it, if you can talk about, is a lot of times when people look at flipping, they don't understand the business of flipping.
Yes.
They think flipping is making it into a beautiful house.
Yes.
It has nothing to do with, yes, you want to do the electrical, you want to do plumbing, but it has nothing to do with making it over the top beautiful.
Yes.
Right? Why do you think that happens? You think? I blame HGTV 100%.
I think so. I think that like since those programs have become so popular and people are all like, oh my God, I could do this and I could do that. Everybody has like that, I want to follow everybody and do what's on TV. And those are just trends. But at the end of the day, like you look at social media now and you look at listing, people are really stepping up their game, right? And even as an investor, like look at where you've come from.
Right.
Right?
No, we've come a
Flip
long
the
way.
switch,
We've
right? You've come a long way.
All of us have come a long way.
Yeah, like the way you do your rehabs now it attracts a different type of a clientele. But you know, your game plan has to come from the very beginning, right? Like you can't look at a house and do an Airbnb out of it and then put a renter in it unless something bad happens. But usually, you know, Airbnb flips, you kind of have to fix it up to make it look appealing. What is the first thing? Women are usually very emotional when it comes to housing, and what do they look at, right? The kitchen, bathrooms, open layout. So you want to kind of, but I also like go and let's say I'm doing a flip anywhere. Let's say it's Northbrook. I'm looking what is on the market in that price range that I want to fall. And what am I competing with? What are they not providing that I can provide that's going to set me apart? Because you always have that, no matter what you do in every business, why me, right? And that's what I try to always find. And, you know, like with my Airbnbs, my design, and people really enjoy it. And that's the reason why a lot of people book my place and they actually tell me about it. So I just feel that you have to find what works for you. Everybody's different. And you do you, I do me, right? And it goes for everybody else. But at the end of the day, we really have to adapt.
Okay. So on a flip, right?
Yes.
So far, it's not like flipping is not your main business.
No.
When the right property comes along, if you can't wholesale it, it doesn't work for an Airbnb or for a rental, then you flip that property.
Correct.
Right? And the mindset that this is what a lot of people don't understand. You always are looking for good quality properties to keep.
Yeah.
As a course of looking, you will bumble into a lot of other good deals.
Yes.
That you can flip and basically make a good buck, right? On an average of all the flips you have done, what would you say your average profit has been?
Made a lot of money doing flips because it was back in 2021 when the market went crazy. But we made really good money, a little bit under $1 million, and but we reinvested all that money into buying Airbnbs. You know, Airbnbs is not easy.
No,
it's not
it's
a burr.
expensive.
It's an expensive business.
It's expensive.
to-
And so hold on. I want to because she just smiles and laughed, kind of just.
And I took myself out of it. No.
Right. But the point is that if you know what you're doing, right? And it's not going to be possible in every property, but in today's market, and we're talking about Chicago-based, right?
Yes.
Because mind you, Houston market or you go to Dallas, your
Totally
numbers are going to be
different.
very different. Here on $300,000-$400,000 houses, $500,000, less than $450,000, you can make a good 60 to 80 one after another, as long as you know what you're doing.
Yes.
Right? I mean, that's and we're not talking about downtown. We're not talking about in city of Chicago. We're talking about suburbs.
Yes.
Right? You can do good home run hits if you understand how to run the business.
For sure.
And clearly, coming out of Corona, you hit it and you hit it hard. Right? But then you backed off a little bit because the market has changed. Right? And yet she takes the money from the flips. Of course, you end up paying a good chunk to taxes, but then you reinvested that into Airbnbs.
Yes.
Right? And a lot of times people think that, oh my God, I'm going to get in real estate. And then, I'm going to have 10, 12 rentals and I'm rich. Right? That's not how life works.
Yeah.
Right? You have to keep reinvesting. Now, the day you stop, boom, of course, you have a lot of cash flow, you have a lot of equity. But this concept we talk about, right? If you take care of real estate for the first 5 years, real estate will take care of you for the rest of your life.
You're right.
Right? I mean, you truly are a living example, you and your family, of that. Yet you haven't upgraded, quote unquote, your lifestyle to the level you could. Why?
Just because I'm not done scaling. I feel that you have to stop thinking of every money you make as a paycheck. And you got to start looking at it. It's like, this is my investment for my future, for my kids' future. And I feel that when I'm done, God knows if it's going to be 3 years down the line, 4 years down the line, wherever I get, the goal was to always get to 100, right? By the end of this year, I should be a little bit above 50.
Yeah.
So halfway there. And then sometimes I think about it, what's next, right? Like, am I going to continue to scale in that direction? So I'm always keeping my options open, but...
I mean, and I like what you do because you've gone out to a bunch of the Robert Kiyosaki stuff. You've
Yes.
gone out to a bunch of Thatcher stuff. So it's not like you're not learning, you're not growing. You're
For sure.
exploring, but guess what? You keep your main thing
Yes.
thing as you're learning, as you're growing. Hey, what about this? What about this? What about this? Right? And that's how people who are in business grow.
Yeah.
Right? You try something, some things don't work. You're like, no, I'm better off doing what I was doing.
And you're constantly reinventing yourself, no matter what. Like you and anybody that's in business, you have to keep. Real estate is an ever-changing market. We're in a very weird time right now, right? Nobody knows what's going to happen. The new administration is doing a bunch of changes, big changes with Section 8 now. So what are you going to do? You're not just going to hide your head and be like, okay, what do I do? Because, remember back in 2019, I worked my ass off.
Right.
I really did. And then 2020, what happened in 2020? COVID hits.
Right.
Remember when I called you? I'm like,
remember.
Andrew, I am not about to lose anything. And it was kind of like a flashback to like many years before where I'm like, oh my God, I'm at that same point. Like, can I get a break?
But, I remember this because you just hit your stride. You just got it up and running. You're like, hey, listen, I got 10, 15 properties. Now, finally, I did the cash flow. It's coming in. This works.
Yes.
Right? And this damn Corona. I mean, it's like you just are like an athlete, right? You're just like, hey, man, I'm hitting my stride.
You're on momentum and then boom.
Something gets, and this is life, right? This is just when you think everything is going great.
Yes.
Believe me, life is going to try to kick you in the butt.
Throw you
This
a
is just
curveball.
how life is. And you got to learn to just say, hey, listen, I know I'm going to just roll with the punches, right? So let's talk a little bit about kids.
Okay.
Right? Because what you're kind of shaping your kids into, with Jacob, with Oscar, with your daughter. I mean, she's young, obviously, still, but you have Jacob. He's what?
15 now. Yes.
Right? He's putting in offers, legit offers. A lot of times
Yes.
people are like, Andrew, is that real? Is this Miss Marta just do the work? And
No.
I'm like, no. This kid came to mastery. I mean, imagine a kid who's 13 years old.
He was 12 at the time.
He was 12 at the time, right?
Sat through your whole class.
Sat through a 7-week, 8-week class. He's going, not only sitting in class, he's bringing friends that are 12 and 13, 14
He's
years old.
having his friends convince the parents to
come to
come and
Mastery.
see Andrew and come to Mastery and
Right.
signing up for Mastery.
Right.
I mean, isn't that amazing?
No, that's
just to
amazing,
have that
right?
type of a movement.
But how are you inculcating that? Because a lot of times, with kids, it happens, oh, I don't want to do what my parents do. Oh, I don't want to go to these houses. They're always busy, right? Rather than you've made them a part of it. So how do you do that?
The main thing is get your kids involved. I feel that the younger you get them involved, the better it is. And just start it. It's all mindset. Start implementing those little things. I mean, don't get me wrong. Sometimes my kids are like, "Oh my God, really? We're going to one of those properties again?" They do. Just
Sure,
like
it's a
every
kid.
kid, they want to
Right.
go out. They're like, Sonia goes and she's like, "I'd rather be at the pool right now," or something.
Sure.
And I'm like, "Well, tough. Life is tough. You got to do what you got to do." So I really try to, this is generational wealth that we're building. And I want to make sure that if my kids get anything, that they know how to handle it.
But this is something I truly, truly believe in, that a lot of times both the couple, meaning the husband and the wife,
Yeah.
both have to be on the same page. Because if one person, oh my God, you're always busy, and when you're trying to build something,
Yeah.
you need that unity and you need
Support.
that, because the kids don't know any different.
Yes.
Right? They're like, oh my God, you're always, like my parents were always busy.
Yeah.
Anytime my teachers, they never show up. I'm like, yeah, because they're doing surgery. Right?
Yeah.
I mean, there were surgery. I knew exactly what they were doing. They were working their butt off.
Yeah.
Right? Hence, I had the best shoes in school. They were working their butt off, so I could go to good
Yeah.
restaurants. It didn't matter what my teacher said. I'm like, listen, you guys can't afford what we can.
Yeah.
Because I knew one thing:
It's a
my parents were
sacrifice.
paying a price.
Yeah.
Right? And a lot of times, I think today that is ignored, and sometimes the vocabulary we use, even kids that are 2, 3, 4, 5, 10 years old, they pick that up. Oh my God, Dad, you didn't go to my soccer game. And sometimes it's not going to be possible
Yeah.
to do every single thing
Yeah,
and
it's
be a
hard.
perfect parent, right?
But real estate has allowed me to really show up there for my kids.
Sure.
And really, it is really important for me to always be there. And especially now that, Oscar is getting a little bit older too. He's going to be a teenager soon. And this is their toughest time. And I feel as a parent, you really have to be present. Because when they're little, you just
Yeah,
change them,
sure.
feed them, and they sleep. But when they start to get into that young adulthood, you really have to be there for them. And I feel that that's my number one job.
Because
is
that
to be
energy
there.
and the passion that they have can get
Yeah.
channeled in the good direction
Or in a bad
direction.
Yeah,
And it's
just like that.
It's just like that, right?
Yes.
You get them channeled in the good direction, that will stay with them, that work ethic, all of that for the rest of their life.
Yes.
But if it for some reason goes the other way,
Yeah.
I mean, now you got a real problem on your
Yep.
hands. Right. So, what would you say to the audience? Because they may look at somebody, oh my God, it's just all this cash flow, all this stuff. What about me? Because the market is more competitive today
Yes.
than ever before, meaning there are more people coming into real estate than ever before.
For
So,
sure.
what do you say to that audience? Is it really possible still today?
It's possible. I mean, think about all the people that haven't even been born yet. What do you think, that we're not going to have any real estate investors? I mean, sometimes I say that to myself because I'm like, oh, I missed out on this big thing. And I'm like, well, okay, but there's still so many other big things that are about to happen. So I really believe in like educating yourself, being surrounded with the right group, and just growing and looking for opportunities.
You know what is funny is, like, a lot of times people are like, oh my God, Andrew, I wish I had started when you started, 2008. I'm like, no, you don't. Because you
It was a
realize
lot tougher then.
2009, 10, 11, right? 12 is when
You
the
couldn't
market
get
changed.
financing.
Yeah, market changed.
Yeah.
2012 was better than
Yes.
2008, 9, 10. 2015 was better than
Yes.
2012.
But your refis weren't there, right?
No,
All that
because
stuff, yeah.
2019 was better. Then we go into Corona,
Yeah.
where we're like, oh my God,
Yeah.
the world is shutting down, right?
Yes.
And yet you coming out
was
of
scary.
it was, I mean, it was more lucrative if you knew how to play the game of money.
Yeah.
Right? We became much wealthier because of Corona.
Yes. Oh my
right?
God.
I mean,
Now, if you look at Corona, it's like, thank you, God,
Yeah, thank
for
you, God.
Corona.
Right.
But no, but it was a huge help because remember, you got on the Zoom,
Oh my
you
God.
talked to the whole group, and we were all united. We were coming up with different ways. If people, with financing, I mean, I was out so much money on private money lending, and you were like, okay, to all the private money lenders, please understand what's going on because all the refis, everything shut down.
no,
It
but
was
coming
just-
out of it, right? How much did our wealth grow?
Oh my gosh.
Right? I mean, you got you got doubled properties,
Yes.
almost doubled
It's
2.5
just
times.
amazing.
And anytime, there's always a silver lining.
Yeah.
The question is, do you basically focus on the dark clouds,
Yeah.
or do you realize that there's no two nights that follow back to back,
Yes.
right? Having said that, guys, please join the community. Ms. Marta has been an inspiration, especially what she's done with the kids, bringing them on stage, sharing that. It's just been such an inspiration to see her growth and what these kids today are doing and running with it. Please help us grow. Like, share, and most importantly, make sure you share the community. You can
And
always
subscribe.
and subscribe, yeah. And you can always go at andrewholmesrealestate.com. That's andrewholmesrealestate.com. You're listening to Andrew Holmes on Cashflow for Life. Thank you. Talk to you soon.